Welcome to JDMBI.com. This is Jonas Report is for the 18th of November. We didn't get much of a move. It was a modest. We dipped down to the 61% line and kind of supported right on that and was bought back up at the later part of the day. And you can see we're moving. And I think most of this, as we talked about yesterday, was critical off of the NASDAQ and its being at its um, critical 50% Morganacci line. From a reading standpoint, though, still relatively, but you can see we get some softening of the MBI Magenta. The fall off of shorts just meant that they took advantage of that and covered through most of it. Not really any attempt to add into it or anything like that. So I think they were just content to trade the range at this particular stage. And it's kind of what we've been talking about from the intraday standpoint. And there it is, 50%, and boom, now the Nasdaq back above over it. So that's enough to well, at least sustain bulls for a little bit. You're going to have to see a turnaround though in steel and lift up of DOC red, not, but overall not horrible from a maintenance standpoint, and you're also in a very bullish period. So you would think that with the inflows and stuff, though a lot of it has been moving to treasuries just because of the advanced yield and safety. And from oil standpoint, dropping significantly. So it's getting into a much more comfortable zone. And more that does move there, then the odds of the Fed stopping their rate increases diminish because if economic activity continues, then there's going to be some more upside pressures, but prices may not accelerate, but it may be an opportunity for the Fed to normalize rates at a middle range that, historically we're so far below it that gives them room to, well, potentially stabilize things. And the euro may suffer if that happens, but I think that the reality is the further oil drops, the better chance the euro has of continuing its escalation, as it will require less dollars, and that becomes a key factor. The Fed is very concerned about that dollar shortage worldwide, and they've been doing a lot to prevent that from creating a credit crisis and or a third party, because we saw some of that happening where parties were unwilling to lend to others overnight and stuff, and that's the kind of disaster that freezes markets, and when those happen then you get cascade effects. So treasuries moved back a little bit here because I think they realized that the rate diminishing maybe a little bit too fast, too far. Fed has not signaled that they're going to be changing anything anytime soon, and they just don't react that quick to things anyway. And gold, little pausation right there, but I think it's still overall within a bullish context. Cyan under red still, and green now pivoting back up above. Turn a magenta here, and you get another leg up, which would not be surprising. Crypto's still trying to recover from the whole FTX scandal situation. I mean, the auditors came through anywhere from 10 to 50 billion missing. If there was ever that much, they don't know. There was no controls, accounting, or anything. So pretty much anyone who invested it or had money in that exchange, they're pretty much going to be SOL, and they're not going to see much of anything coming back from it, whatever's been liquidated and moved around. They had all sorts of backdoors and stuff, everything that you just don't do if you're legitimate. But we'll see how that plays out. That's an interesting one, and I think it definitely puts pressure, because the question will become whether or not judge will require liquidation of any of those assets to secure them, as opposed to even having them in cold wallets and that. So that'll be an interesting one to find out what's going on there. But you get some bullish signals from that, because I think that the worst of it at least is over. And you just already know that everything that anyone had in those exchanges is gone. Maybe they'll find it, maybe they won't. Will they look? We'll see. From a 50K standpoint, we saw the basing effect, and then Magenta started taking leads. We ended up with that white MBI, but Resurgence later on has brought that back up, so it'll be the next pivot lower. of the magenta will probably be the one that's a bit more of that significant downturn. From an intraday standpoint, quite beautiful. We started to move up there. A couple of positive extremes were built into it, which was just at that 39.70. We hit the 39.70 and just the cascade blew through the 57 one, then all the way down to the 38, and then got caught right in between there. Where there were a few other positive extremes, we just didn't mark it. I try not to clutter the chart too much. It was interesting, but I wanted to point this one out where I've marked the subtle differences that you can achieve from the DOC mixed with the MBI, um, where you get this similar spike of white and the magenta falling. You would think that that's where you're going to get your short, and it is a short signal. However, the difference you see on the DOC here is you have no crossover of any of the respective lines, i.e., the steel coming below. Cyan is really the one that I would consider a focal point. You're in continuation zone with the magenta, so yeah, it's moving across with the orange here, and then you get the spike back, but takes you up. But the secondary one coming through happens with crossover of steel having just happened, orange crossing above steel as well, and cyan moving above steel. At the same time, you had green. So you have all this activity of a flip of algorithms, and that becomes much more powerful. So when you're looking at those and you see this and you think, oh, well, that's automatic short there. Well, it's not wrong. It's just maybe not going to have the momentum or the clarity that you might be looking for immediately. And whereas something where you get these crossovers that take place immediately, and that's why we look for the DOC spread where you have a sign coming from below red to above it. At the same time, you have a crashing of the steel and the orange rising. Those usually give you your nice, decline moves, kind of like right here, where it crosses below the 33. You get the moves all coming across, and you get that nice continuation that takes you to the 0 points. So I just thought I'd point that one out. Nothing we didn't already talk about, but it's always worth revisiting the setups. Got some nice little buy runs that brought us right back up to the exact same algos, and then we mixed right back in between them, and then we were bouncing, and then finally that 39.57 became a little support there, and we just pushed above 39.70. I would expect that we're going to come back to it because it happened on positive extremes. So that will be the next look, and I think that we get the holiday coming up, so things are probably going to get soft going into next week, and then it'll be interesting because we're going to start getting real numbers as to how things are operating and whether or not the consumer is tapped out. And I think if um, Black Friday comes out successful, then the rally can continue to the end of the year. But otherwise, it could be problematic. So definitely be keeping a tight eye on all that information. As always, though, trade well. Look for me on the Skype chat.